Welcome to the 101 Million Podcast, your weekly crypto alpha for those who never quit. Today, we're going to be diving into why the markets are collapsing. What's happening? Are we going lower? Are we going higher? Or what's next in general? We're going to be talking about macro and what the data and what it's showing us and what it's maybe hinting towards as a possibility of where we might be headed. We're going to be talking about why right now picking individual tokens really doesn't matter, in my opinion. Right now, if you're looking at this token and how it's doing versus this token and how it's doing, it really doesn't matter in this current season because of underlying conditions. I'm going to be diving into that a little bit later in this podcast. And lastly, we're just going to overall be talking about what I'm doing with my own money in this current market environment. Okay, first off, let's talk about why markets are currently falling. It's actually a number of different things. It's not just one thing. On one hand, you have the fact that people are really worried about Trump's policies, specifically around tariffs and what that's going to do to inflation. So a lot of people are really scared that Trump's policies are going to cause a reignition of inflation. Basically, that inflation is going to spike back up, get really insane, get out of control, and just go on a tear, and that's going to cause the Fed to have to hike rates, and everything's going to go way lower because of that, and it's going to be a liquidity nightmare. That's one thing. People are really, really scared about that. The other thing really causing this retracement has to do with liquidity, and so crypto, Bitcoin, the markets seem to follow liquidity on a lag. So what you saw in 2024 is you saw liquidity spike up around September, and then it was a couple months later that you saw the markets spike up. And then really late 2024, we saw liquidity drop back down. And although crypto started to go down in, after the Fed meeting in December, Bitcoin stayed pretty strong until a couple months later, where now it's been spiking down and kind of following liquidity. So you have almost this like lag effect when it comes to Bitcoin and crypto and liquidity and the markets, where it seems to be like following it, but on a little bit of a lag. Then we have recession fear. So there's a lot of people that are worried about a recession. There's a lot of metrics, a lot of data that's coming in that's not looking good, and it looks a little bit recessionary. So people are kind of scared about that. And then even outside of that, we have a lot of market uncertainty. So Trump's a little bit chaotic. He does kind of things a little bit different than most people are used to. And nobody really knows what he's going to do next. And that leads to a lot of market uncertainty, which leads to a lot of volatility and a lot of people kind of hedging. And in general, uncertainty isn't the best thing for markets. And then lastly, overall, it's just macro. Okay, so why are markets going down? The really short, really easy answer is it's because of macro. It's not because of crypto specifically. It's not because of crypto fundamentals. If you look at crypto fundamentals or crypto specifically, those things look amazing. Those things look fantastic. It's like the dreams of the like most bullish of the most bullish of the most bullish. That's what's happening with crypto right now. Okay, it's like the picturesque, perfect, amazing, beautiful environment. It's amazing. Okay, that picture, those fundamentals, amazing. So it's not really a crypto problem. It's a macro problem. That is the issue right now. And this is the part I really want to get into people's heads. It's underlying conditions that are causing the weakness you're seeing in the market. Where maybe a couple months ago we're seeing memes pop off and certain segments were popping off, but like alts were just not doing good, or Ethereum was just not doing good. And that was more like specific to like sentiment and different culture within crypto, and it was more of a crypto problem. This is not a crypto problem that we're going through right now. This is a macro problem. So what is macro telling us? Because that seems really important given that macro is in the driver's seat. Macro is what's causing this collapse. So, the logical conclusion would be that macro is what can save us if it's headed the right direction, or cause us even more pain if it's headed the wrong direction. So we kind of want to know what macro is saying, where macro is going. Okay, well, first off, one of the things we've been talking about for months and months now has been dollar strength. This is one of the reasons liquidity has been like getting sucked out of the system, is because the dollar has been so amazingly powerful. It's like too powerful. Okay. This has to do with like debt dynamics and a whole bunch of other things. But basically kind of think of it sort of like if you owed somebody a loan in Bitcoin and you owed them one Bitcoin, and that Bitcoin at the time was worth $100. And you're like, I owe you $100. I owe you one Bitcoin, not a big deal. But your debt is denominated in Bitcoin. Okay. Imagine that. And now imagine Bitcoin strengthens. Okay. It gets stronger. It goes from $100 a Bitcoin to $1,000 a Bitcoin. Now you only owe them one Bitcoin, but US denominated in USD denominated terms, which is the money maybe you make money in, now you owe them 10 times as much. So that's not very good. So maybe you're like, oh my gosh, I got to pay off this debt like as soon as possible, because what if Bitcoin keeps going up and soon I owe them 10,000 or 20,000, etc. So you go sell off all your stocks, you go everything you can to pay off this debt as quick as possible, because you're really nervous it's going to keep going up. That's kind of like a really easy example of like dollar strength and why dollar strength causes liquidity to get sucked out of the system. When the dollar gets strong, all these people who owe a ton of money and a ton of debt in dollars have to go sell stuff and do a bunch of other stuff to go pay off those debts because they're worried about the dollar continuing to strengthen. That's a really basic example, but kind of gives you an idea of like dollar strength. Not even though it sounds good, like you think strength, right? That sounds like dollar strength going up sounds good. It's actually a bad thing. People don't like. Nobody likes it. Even like people in the U.S. don't like it. Trump doesn't like it. Everyone hates it. Literally everyone and their mom hates the dollar strengthening. The only thing it's good for is inflation. Okay, so when the dollar strengthens, this does help inflation. Wise, because now we're paying because the dollar is strengthening in dollar terms. Maybe the inflation is like going at a slower pace, basically, because back to the Bitcoin analogy, if your Bitcoin's now worth $1,000, you can buy a whole bunch more stuff with one Bitcoin than you could before. In the same way as dollars don't strengthen in that same way, like they're not that volatile. But as the dollar strengthens, you can now buy more stuff as far as imports, and maybe that leads to less inflation. So it's good for that. But outside of that, it's just in general, everyone hates it. Like it makes U.S. trade like less competitive. Other countries like kind of get peeved about it because like for all their financial read, like China doesn't really like it right now. They want to stimulate. They want to do a bunch of stuff. They can't do it because the dollar's too strong. It just causes like economic havoc. Okay, it's just like they call it the dollar wrecking ball. It just like goes through and destroys everything. Everyone hates it. Okay, so that's another reason I didn't mention. I kind of mentioned it when I said liquidity was retracting, but I didn't directly mention it. I've talked about this in tons of pods and videos in the past. But that's another reason the markets are going down, is because the dollar has been strengthening because of Trump. And a lot of the thought process behind this is like Trump's using it as a negotiation tactic. He wants the dollar strong short term so he can go to China and be like, hey, let's work out a crazy trade deal because you guys got to stimulate. And so he works out some really favorable deal to the US, and then like he weakens the dollar a ton because he wants it weak anyway. And it's like a win-win for everyone and their mom. That's kind of like the idea. Okay, this is one of the ideas. But anyway, recently, over the past couple of days, the DXY, there's dollar strength index, has like utterly collapsed. That thing has been going down, and it has been looking beautiful, absolutely beautiful as far as liquidity goes. Okay, so on the first front, what is macro telling us? Dollar strength is going down, and that is insanely bullish for crypto and risk assets. Why is that bullish? Well, you probably have heard like everyone on X and YouTube and everywhere else being like, hey, we need the Fed to be cutting rates. We need QE. Just like everyone just like learned QE exists, and now they're like every comment QE. And so everyone's like really excited about those things. Okay, I've talked about this a lot of times before, but in 2017 we were not getting any QE. There was no QE in 2017, and you know what? There wasn't. There was no rate cuts in 2017. In fact, we were getting rate hikes. The bad thing, rate hikes in 2017. So like they were doing the opposite. The thing that everyone says that they're doing that the markets can't go up. They were doing that in 2017. And despite that, we had one of the most insane, epic bull runs in the crypto space that there's ever existed. And that's in part because of liquidity coming into the system from other places. You had other sources of liquidity. And one of those sources was dollar strength going down. In 2017, dollar strength absolutely collapsed under Trump. This is something he wanted to do. This was a specifically purposeful thing. It increases the U.S. competitiveness when it comes to exports. And so that was that's a Trump playbook. Push dollar strength down during 2017. And we're seeing that kind of play out in the same way today in 2025. Okay, so and again, in 2017, we didn't have rate hikes or rate cuts. We had rate hikes. We didn't have QE. but we did have dollar strength going down. So dollar strength going down is actually really, really important and a really huge factor when it comes to ultimately, crypto assets and a bunch of other stuff going up. The next point on the macro front is inflation. Okay, so what is inflation telling us? Well, everyone and their mom has been saying that inflation is going to get out of control. It's going to get really crazy. They're just like overly afraid of tariffs, and they're overly afraid of inflation reaccelerating. And this is just something, this is like human behavior. It's called recency bias, because they recently went through an inflation scare. They're like more prone to believe it's like will easily happen again. But that's very unlikely. Very, very, very unlikely. We've talked about this before. I'm not going to go into all the details again, but it's very unlikely that we're going to see that again. I think people are overly fearful of it, especially the tariffs. I've talked about many times before, there was no evidence in Trump's last presidency of any meaningful increase generally in inflation due to tariffs. We have some places like washing machines and stuff like that where we had some inflation. But in general, across the board, no meaningful increase. And even if we did, it's like a one-time, that's a one-time tax. That's a one-time increase. And something the Fed could even look through, and it's not even like a big deal. If you look at something like trueflation, which is like you have the Fed's way of measuring inflation, then trueflation is like this alternate way. There's like the free market way of measuring inflation, where they try to come up with like better methodology to kind of front run what the Fed's going to see later down the line as far as CPI goes. And trueflation in just the last couple months has started showing inflation falling off a cliff. In fact, by trueflation's measures, it's sitting at like 1.73%. So it's actually under 2% in inflation by trueflation's numbers. And if history is any guide, that means that we're going to see that CPI numbers start to head that way in the near future, which again, if inflation gets under control, we're going to see more rate cuts. Now let's talk about rate cuts. The market has been pricing in like 1 to 2 rate cuts, and then it flipped to just 1 rate cut. And I've been talking about for months how that's not what the data showed. I thought that people were vastly underestimating the amount of rate cuts we were going to get. They were taking the Fed's forward guidance way too seriously, and we're going to actually get way more rate cuts. And why do rate cuts matter? Rate cuts are another way we inject liquidity in the system. So the market's been only pricing in 1 rate cut. This is what started the whole bearish move down. Okay, the Fed came out, they were hawkish. Everyone flipped. They're like, we're not going to get as many rate cuts. And everyone lost their minds, and crypto prices have been down only from that day. Literally, from that day, it's just been down only. Okay, so rate cuts are actually a big piece of the puzzle. And the market's gotten so bearish, they're pricing in 1 rate cut. And I said, you know what? I'm calling the bluff. That's not the case. Fed was using forward guidance as a tool to get where they wanted. But if you look at all the data, you look at everything coming, everything's pointing towards lower inflation. Okay, lower inflation, and that means the Fed's going to be cutting some rates. You know what we saw over the last couple of weeks? We see now the market is now pricing in 3 rate cuts. Okay, when it was only 1, I was saying we're getting more. Everyone said I was crazy. The market's pricing in 3 now. Okay, because guess what? Inflation, not as big of a deal. Everything's actually starting to look good, and we're going to get this thing sorted out. So we're going to get more rate cuts, and that's insanely bullish for crypto. Okay, outside of that, you have these recession fears. Okay, so the data's coming in, and it's not looking very good. The data coming in from the market is looking pretty bleak, actually. There's a lot of like warning signs for like, oh my gosh, recession. And, you don't need to be a genius to know that sounds really bad, right? You get a recession, that's bad, okay? You don't want that. That's not good for your backs, okay? Recession's not good for your backs. And, you got a lot of these things coming in. But here, let me give you some insight into why we're seeing these warning signs. Basically, our economy is driven by government spending. It's a lot of the hires over the last couple of years have been the government. A lot of the spending is the government. And so Trump coming in with Doge, and he's cutting all this government spending. He's pausing all this hiring. That is not good when it comes to the economy, because the government was, they were letting the money flow, the money hose flow into the economy, and they're turning off that money hose. That causes a lot of the data to come in, not good, because the government's driving a lot of that data. The government's driving a lot of that spending, okay? So you do see these bad numbers come in. But in my opinion, this is not a problem, because we have something called the Fed. You know what the Fed does when we have a crisis? They cut rates, and then when they can't cut rates anymore and they need to keep giving some of that liquidity into the economy, they start doing QE, okay? And we know what that does for our backs. We know what rate cuts plus QE does for our backs. So if this becomes a problem, if this data keeps coming in negative, and inflation's coming in just like super, super cold, super, looking good, the Fed's just going to cut rates. And then, again, if they need to go further, they'll do QE. we have so much room. We have so much runway on that front because rates were hiked up so high. I really don't think that's going to end up being a huge issue. Going back to liquidity, again, as I mentioned earlier, liquidity is ticking up, but it's not anything insane. You see people post on X or like, oh my gosh, liquidity is skyrocketing. I don't know what they do with their little charts to make it look like that, but it's not really skyrocketing is to the degree that they're saying, just like a nice little, it's trending up. That is a good thing. They're not wrong. And if you zoom out, they're also not wrong about the general direction of where liquidity seems to be headed. Again, dollar strength coming down, good for liquidity. Rate cuts, good for liquidity. China stimulating, good for liquidity. Europe stimulating, good for liquidity. So more liquidity is coming. It's more a matter of when, not if, and kind of how it works its way into the system. That's what we're waiting for. We're waiting for how does all this kind of unravel itself? This is like a complicated knot. How does this complicated knot unravel itself? That's the hard thing to say on like when exactly is going to unravel itself. But it's not a question of if liquidity is coming, it's when liquidity is coming, because everyone's got their liquidity, hoses ready to fire, and they're working through their various processes to get those hoses going. Okay, so let's focus a little bit more on crypto. I keep getting people asking me, about this position, that position, and saying, hey, what do you think about this position? It seems to be slightly underperforming this one, or this one isn't going up, or this one, is going up. What do you think? And in my opinion, all of that doesn't matter. All that matters right now is macro is in the driver's seat. Underlying conditions are all that matter right now, and they're not favorable. So in general, if something's performing or not performing, it's kind of just random in some instances. Like there's maybe some influencer talked about that token, it's going up, or that one's selling off because maybe it was lagging behind, or I don't know. I would pay more attention to what do those tokens do when conditions are favorable? When they're favorable, do they do well? And if so, when conditions come back in, they should do fine. As long as it's not something like a meme coin or attention-based, as long as it has some staying power, it should be fine. Right now, personally, I'm just holding all my positions. I'm waiting to kind of see how, the direction the market picks. I've been building up this cash position for the last few months, just kind of waiting for the right time. It helps psychologically just kind of like sit there and know you have some cash to kind of like fire off when the time's right. For the people that are really determined to jump into the market, I've been saying that DCA is the way. Okay, if you're going to do it, at least DCA in over time, because it's really, really, really difficult to time the bottom. And I don't know, like short term, it does feel like we're due for some sort of like relief rally of some sort, maybe going into March. Midterm is less clear, although it's becoming more clear. I'm starting to kind of like see a lot of things center in on like May and June, which is weird. I'm gonna keep looking at that data, but a lot of things are centering in on May and June as maybe possibly a bullish season. But the long term is clear, in my opinion. The long term is bullish. Fundamentals are bullish, and crypto fundamentals are like foaming the mouth bullish for crypto. Macro is headed the right direction. So long term, it's clear, in my opinion, where we're going. It's just about how we get there and when we arrive. That is the question. So I'm building up a cash position. When I start deploying that, I'm going to be DCAing it into the market. I'm not quite ready yet, although some of the data I'm seeing coming in for March does have me a little bit excited. And I keep going back and forth. And maybe I should start DCAing a little bit in March or not. I don't know. I want to watch what happens on this summit, the summit, and see kind of what comes out of that. See the reaction to that. But overall, like I guess my attitude is patience. I'm being patient even with my capital. I'm not just like jumping wildly into the market and DCAing or I'm not just like deploying all my capital right now and buying all the dips. I'm being patient. I'm kind of letting the market tell me the direction it's going to go, because all that matters is underlying trends. It's not like we're in a bull run and you had a token retrace and you're just like, buying the dip on that. Maybe that makes sense. What you're seeing is a market-wide meltdown. And so you kind of want to wait for the trend to reverse. You want to wait for overall underlying conditions to start trending towards favorable. And like a single day or 2 days of it breaking and trending up isn't enough. You want to see that trend like fully start to reverse, and then you start deploying capital. And maybe you miss the exact bottom, but you'll save a lot more money doing this overall strategy in the long run, by and far, because you don't want to catch a falling knife. And a lot of times, like markets can go down longer than you expect in some instances. Overall, though, obviously, I am bullish. I still have all my money in the market, and if the fundamentals start changing, start shifting, they turn bearish, I'm happy to flip pull my money out of the market and wait for a bottom. But that is not what I'm currently seeing. And until I see those fundamentals switch, I'm happy to keep riding this market out. As always, remember, none of this is investment advice. Crypto is risky. You should always do your own research. Remember, long-term patience and positioning yourself ahead of the masses is the easiest way to beat the market. I'll see you next week.